Welcome to the game plan. My name is Gareth Soloway here at verifiedinvesting.com, and we're going to delve into the charts, probabilities, key trading levels, not only on stocks, but on crypto as well as commodities. So to start out the day, the big headline, again, pushing the S&P futures sharply higher, is that tariffs that are likely to go into effect by the end of this week, early next week, are going to be more targeted, meaning that they're less broad. That is a bullish sign for the market. So right out of the gate, we have a bullish factor triggering initially a rally in the S&P 500, likely to lure in the bulls, the buy the dippers, so that again we can see that next rollover come over the next 2 to 4 trading weeks. All right, follow me over here. Let's take a look at the big board and see where the S&P is trading. And so this was Friday's action, right? We started Friday kind of down, the markets kind of ground up, and then right at the end of the day, we saw this big pop to the upside where the markets essentially closed flat on the day. Now it was options expiration, triple witching. So anytime anything happens on a Friday of triple witching, I always look at it suspect, right? Meaning that, is this the institutions trying to push things to where they maximize their profits on options trading, or is it actually real life, real action? Otherwise, you don't really care aside from that on normal Fridays, but on Options X, you definitely pay a little bit more attention. Now, after hours on Friday, we didn't do much. You could see just sideways chop. And then this is 4 in the morning when the SPY began to trade. And we can see initially a big pop up, and then we've been trading sideways to higher into the stock market open today. So we're looking at a big gap up today, over 1%. And again, as I said, this is on the back of essentially tariffs that are going to be put into effect, but much more targeted, which means less broad tariffs. That is a bullish sign. It means maybe less inflationary pressures, maybe less economic hardships, etc. And that's what the market wants to hear. Now, the question is it going to be long lasting, or is this just a short-term fix, right? And the answer is it's probably a shorter-term fix. It gives the markets a bounce. One of the things I talk about with my traders all the time is how the markets, after a big sell-off, they can't dump out too quickly again because you haven't lured enough bulls back into the market, right? So again, you got to get the bulls, the exit liquidity, the buyers have to be lured in and pop the market enough to make people think there's a new bull market or that we're going back to all-time highs. In other words, before the rug pull, the next drop occurs. So if we look at the S&P 500 daily chart here, we can see we had that big drop here all the way down there. Remember, this was a parallel, a perfect parallel between this pivot low going back to September's low to this low, which is perfectly parallel with the all-time high back in December to the new slightly higher all-time high in February. Okay, we had the big 10% decline. Now you've been chopping around. Now today, we're looking at a gap up right around here, right in this vicinity. Now, what's interesting about that is that we're getting closer to the first upside target that I've talked about with you guys in the game plans. Now, again, what was that first target? Well, what we do as a technician, we can look at Fibonacci retraces, we can look at former pivot points. Now, the first thing I'm doing here is this pivot point right here. This was the lowest point between this high and this high. Essentially, you could make a case that this is like an M pattern, maybe like that, right? So oftentimes when you retrace, and I'll draw it down here, here's your M pattern, which is a bearish pattern. When you get your retrace in the market on an A, it's called an MA pattern, it goes up essentially to that midpoint before that next dip, so the middle of the M. And so that's the first point. Now, I want to be clear. It doesn't mean that that's going to be the high on the market on a bounce, right, up to this level here, where if we draw that line across, essentially it's right there. It just means that's my first targeted point to start to pay attention. And to put it in perspective to you guys is, essentially for me, I moved out of a lot of shorts when we were down here that I had with Smart Money Stocks and ETFs members, okay? And I even bought a lot of longs. Now, as we've been bouncing, I've been unloading some of those longs, but I haven't started to re-short the market aggressively yet because we haven't had a big enough bounce. Like, again, I'm not going to get out of a short here and then short it at the same price again. It's got to be significantly higher, and I have to have technicals that give me that focus, that higher probability, right? We want to be the casino. We want to know that if we trade 100 times, we win 70 or 80 times out of that 100. We're not going to win 100% of the time. That's just the basics of trading, but we want to get that win rate as high. So the key is going to be here. The level I'm watching on the S&P 500 is around 57.70, okay? So again, 57.70 57.70 is my first upside target where I probably will start to nibble. And I stress the word nibble. Nibble doesn't mean go all in with leverage. It means nibble like 1%, 2%, 3%, 4%, 5% of portfolio for me, right? I'm just talking about what I'm going to be looking to do. And then if we break this, I'll leave plenty of money on the sidelines that if we do break it, and let's say we go to a retrace of the scene of the crime, this longer term wedge, which can happen, by the way, don't underestimate the market, especially a market that rallies. In bear markets, bull bounces are known as rip your face off rallies because they can be that powerful. So if it goes up here, then that's where I double and triple my short side right there. And then what's nice is you have a very defined stop zone right here, right? Your previous parallel, if you were to confirm above this, then you can exit on those trades. Essentially, you know where the market has recaptured its bullish bias versus just retracing after a sharp move to the downside. All right, hopefully that makes sense to you guys. Just a couple other side notes. I have a long on Tesla. We've still been riding that. I have longs on other plays, Kava, Amazon. We went long in smart money stocks. I'm still holding some of the longs because I anticipated there could be some more upside. But I will say today, as we inch towards this midpoint right here, I will be looking to take a little bit more off the table. I like to get in on my long slowly and then unload slowly. So I kind of do it dollar cost, as it moves up, just take a little bit more off, And same thing on the shorts. I start my shorts small, I add, etc., bringing that dollar cost average up on the shorts. All right, so just to go over that on the S&P 500, I think that was important. Taking a look at some of these stocks, you can see Tesla, guys. If we look at the Tesla pre-market chart, you can see it's right around the highs of the day, nearing $260 per share. Now, I think what's so interesting about this is one, by the way, that I'm still long with smart money stocks and ETFs. I think our average price is $229 or so. So we're about 10% in the money. Let's walk over to the big board here and take a look. But essentially, this is one where the bearish sentiment on Tesla got so overdone, a stock falling from almost $500 down to $220. And then if you looked at the charts and you ignored all the craziness in the news and all this bearish sentiment and all that stuff, and I want to be clear on this, I couldn't care much about Elon on the bullish side or the bearish side. It's unimportant to me, right? For me as a trader, the logic is what I turn up to the maximum and the emotion I turn down to the minimum. So again, we all have our political leanings and all that other BS and all that. But if you want to make the most logical and smart decisions and have the highest win rate, you actually have to ignore all of that emotion. All of it. Get rid of it. It will literally hurt you in making decisions, not help you. And I've experienced that, by the way. Let's be fair. I was a brand new trader at one point in my career. And again, I made every mistake in the book. So don't feel bad when you guys make mistakes. We all do it. For me, I wish I learned a lot faster, and my learning curve was pretty darn slow. Now you guys have hopefully stuff that I'm doing. That's the whole idea of the game plan and the services and the teachings and everything like that, is to improve that learning curve so you get to my level or close a lot faster than it took me over time. All right, so looking at Tesla, look at this. I mean, look at the gap fill here and this sideways. This was just before that major bullish move in the market, and what we could see is Tesla came in here. And one of the things is, Ben, my head trader out there, he did this video, right? I think it was a couple weeks ago when Tesla was down here, and he said, Tesla's going to bounce. The negative sentiment on that video saying he was wrong and that Tesla was going to go down further, I heard that, and I was like, they were talking about it in the office, and I'm like, Tesla's going to bounce. This is the emotion again, where once you guys get to the levels that you start paying attention to emotion and it doesn't impact you, and it takes time, right? Remember, because we have to build up almost like a wall, like a defense wall of logic over everything. Okay, so you get to a point where you can read biases, like strong biases, like, oh, it's going to zero, oh, it's going to a million, and vice versa, which is how I can trade Bitcoin so logically as well, is you get to these points and you actually use that as an indicator of the next move. So it's not your only indicator, obviously. We use the charts primarily, but when I see a chart level like this and I see the bearish sentiment, I'm like, bounce time, baby. Let's go. And sure enough, again, we're trading near 260. And by the way, am I looking for Tesla to go up here? No way. I'm not looking up here. Like I said, I might even take profits today in this range right up here. And that's what a swing trader does, right? We're in at the lows, we take 10 or 15%. We're in at the highs, we short it, we take 10 or 15%. We just play back and forth, back and forth. And again, that's how we make our money. While the average person, let's say, bought in here, and they're down, but then they're up, but then they're down. We're just like 10, 20, 30, 40, 50, 60, 70, 80, 90, 100% type stuff. All right. In any case, by the way, just remember, I do take losses too, as does everyone. All right, so Tesla, again, good bounce. Now, Tesla, again, if we're talking technical level specifically, there's a level here and a level here. These would probably be your two key levels to watch in terms of a zone. So again, I do think Tesla could go as high as like 290 to 300 area right in here. I do think that's a possibility. But again, now that I'm up over 10% on a trade, if it gets a little bit higher, at least I'm going to take half of that position off the table. Smart money management is key. Okay, let's go to a couple of these other ones. And so this is where we get into this type of stuff where we're seeing these big bounces. And again, you know, you see like a stock like APP collapsing down from $525 down to $236. You got to figure there's going to be a technical bounce. And I'm going to show you where I'm going to reshort this thing. So I was short up here, right? Then I went long down here. I'm out of that long now. I've taken profits. But I will reshort and start a position if it gets to this level. Now, why this level? Well, it's a gap fill. And it's also, see this sideways chop right here and this little high pivot? That's telling me that's a major, major level. In fact, we can just bring it over here, right? So all of this sideways chop before the earnings pop, then the collapse. This means this would be a level. And what I would also do is, let's just, for you know, its and giggles, let's just do a retrace. Here's your Fibonacci retrace. And if I know it's hard to see because it's in blue, but this is the 50% Fib retrace. And so you see how, again, it's not a decision based on, do I like APP? Do I hate it? Do I think it's going to go to 500 again? That doesn't matter to me. It's purely that this is the 50% retrace. It's also a gap fill. It's also this sideways consolidation. If price can go straight up into that, my probability of a pullback is probably around 80%. If it's in that 80% range, I'm taking that trade, right? I'm taking it every time so that the law of probabilities work out in my favor. Carvana, another one, a massive move down. I mean, so many of these stocks have gotten absolutely crushed, getting a bounce here. TTD, by the way, I talked to you guys, I think a week ago on this one. TTD was coming right into major technical support here after a crazy drop on earnings. One of the things I just saw, though, take a look at this. If you take a trend line and stretch this down, to me, this looks like a breakout today, or maybe on Friday's close right here. And it is trading up about $1.50 pre-market, but I love that line. It's now gotten above it. It should free it like a jailbreak, and I think this could trade back to $65 a share or so. All right, let's move on to Bitcoin. We'll go over to the big board to do this here, folks. So if we look at Bitcoin, Bitcoin has had a nice Sunday and early Monday price action. Again, it's still stuck between the key levels of resistance here and support zone down here. So it is grinding up. Stock market's up, so we know it's risk on in the markets, which is good for Bitcoin. The question is, can we get back to 92,000 here? That's going to be your first big test for Bitcoin. If we fall, we know 72 to 74 is that major support zone there. So again, it's nice to see Bitcoin moving up. As I talked about last week, I do have some altcoins that we've picked up. I actually took half of my Avalanche position off the table, not because I think it's done running, but because I had a pretty big position. So again, we were slightly in the money, about 8.5%. Part of me, again, the money management side, which is something, by the way, we always have to work on. Even myself continues to work on that. But this was a scenario where when you have a bigger position that makes you slightly uncomfortable, and in crypto, this position made me slightly uncomfortable having that big of a position. Well, when you get in the money a little bit, take half off, and then you don't, then you're like, okay, let this second half run, and if it pulls back significantly, I can rebuy lower and bring my dollar cost average down. And so it gives you a lot more freedom and maneuverability, which is so, so important. Remember, the worst thing in trading and investing is when you get handcuffed. When you get handcuffed because you over leverage yourself and you can't maneuver, you can't add to the position, you can't do anything, and you're just at the mercy of the market, that's when you're done. Just pack it in, go home. It's done. All right. So again, we'll keep an eye on Bitcoin here, see if it moves up in the coming days. If the S&P keeps rallying, I would anticipate it to do that. Gold today. Gold is fractionally higher. We are getting that pullback. Again, I predicted based on the chart, purely the chart, nothing to do with my personal opinion. In fact, I love gold mid to long term, but the chart said a small pullback. Actually, I still think we're going to get more of a pullback here, but you can see it's starting to pull back, small bounce today. We've talked about target prices. First area of support would be around 29.50. Second area would be probably down around 28.50. And then this is your big one down here, which is your bigger parallel trend line. So again, very much derived from the lines on the chart, not my personal feeling. We did hit a little support on silver. So silver on Friday tagged here. You're getting a small bounce. Not a buyable level for me because there's just not enough reward to the upside to buy it. I would need a bigger dump to get in or a good bull flag here if it went sideways, let's say for 3 or 4 weeks. I wanted to show you copper. I actually think copper is a great short here. Again, double top, extended move up. Okay, so again, you've had 1 move, consolidation, 2 moves, consolidation, 3 moves. Generally, what we say in the trading world, and this is key, guys, is that it's 3 peaks to a valley, meaning that oftentimes if you look at stocks, they have 3 runs in total. The first 2 bullish consolidation, then the next leg up, consolidation, the next leg up, but 3 peaks to a valley. The valley implying that that's your bigger pullback. So I think copper, again, into a lot of resistance. Doesn't mean I'll be right, but probability-wise, this pattern setup is now at a point where you would expect a pullback on copper. Natural gas today, it is getting a small bounce. Again, we talked about this beautiful topping tail, which was a bearish signal down to support, bear flag, and then a drop. Today it's getting a little pop, but this is playing out just like the chart guided us and I talked about last week. My guess is you might chop around, but then I think, again, you roll over more on copper, on natural gas. U.S. oil, let's take a quick look at that. Oil, again, continues to consolidate in a bearish pattern. Again, I've said before last week, we talked about maybe getting as high as 70. I still think 70, a little bit above that is possible. But again, notice the pattern formation here. Down move, inside bar. Go back to natural gas. What did we just see on nat gas, right? So this is the key. Down move, inside bar, down move, right? So again, I'm not trying to reinvent the wheel. I don't think anyone should. When there's things out there that we can pay attention to, pattern formations that give us probability, and then we put the levels like gap fills and topping tails and bottoming tails and engulfing reversal. Just these things alone, the simplicity of it is beautiful, but it also gives us the highest win rate. One of the things that I find is that too many individual traders and investors, they put on all these other signals on their charts. And what do? You get paralysis by analysis, right? So essentially what you get is like, oh my goodness, this one's telling me bullish, this one's telling me maybe, this one's telling me bearish, and you don't make the decision to take a trade. All right, ultimately, less sometimes is more in trading and investing. Keep it simple. Use the charts. It makes it more easy for all of us to just be able to decipher what is on that chart and go with the high probability setups. That's what I teach in the Winning Trader series, folks. That's what I teach here in the game plans and trading the closes, and that's what we use to make decisions in trading in the services. All right, I got to get going. We're going to be trading this market in the Apex Live day trading room. You guys are rock stars as always. Thank you for supporting us and always tuning in to follow me. I do appreciate it. And again, folks, I'll see you later. Take care.